All right, good morning, everybody. Today is March 20th, 2021, and we're going to be taking a look at some altcoins. So I'm going to go through the first few that I've been looking at really closely. Um, First is Cardano. Now, I had a position that I exited, and I believe it was where I exited back. It goes back in here, so I avoided this run up, and that was because of on the 7 I got stopped out of a trade, and I potentially was going to take this, but we were so close to the top of this channel, or this retesting this trend, this bottom trend line, that I just didn't find it comfortable to go back in. And I was back here looking at potentially taking an entry, and let me get rid of the moving averages so it gets a little bit easier. I'm going to hide the drawing tools as well because this chart's getting cluttered. And so my rationale back here for not going into the market is that I needed to see a dip below here to really get back in, because I needed to see there's an area right around here that had some order book support, and I wasn't comfortable without testing that support to see if it was going to hold to come back in. And now we've kind of gone and done this again. You know, this 3 was looking a lot better for me because I've been expecting a pullback, a larger pullback, a much larger pullback, going all the way down into this like 1800, 1790 area, somewhere around there. Somewhere in this area, I've been looking for a pullback and an actual retest of this this previous top, and we just haven't got that yet. So I'm patiently waiting. Now, if this turns into a reversal candle and closes that way, I may re-enter ADA. Now, not hiding the drawing tools, I was expecting a move down to the 618, at least, and then potentially the 786, which I didn't really trust was going to happen. But we're kind of in this no trade zone for me, which is between these two lines at the moment. And that's because we haven't come back to do a back test down here of this longer term support. So what you're seeing when I go all the way out is this is the initial run up from this trend that took us all the way to 3,200 Satoshis. And we had our breakdown here off this trend, came back and retested the long-term trend down here, and then came back and back tested this area. Now what I'm actually expecting is to have like a similar pattern occur where we come back and retest this long-term trend support and then come back and try and retest this. Now, I was hoping it would happen much more quickly so we'd have a violent V-shaped looking recovery, but we're kind of just been floating in no man's land, and that's not really great for me as a trader to see all this consolidation, and this looks bearish to me. I mean, it could be a head and shoulders pattern or a triangle that looks like it's going to try and break down, and I can make the argument that that's a triangle right here, a descending triangle. And the target breakdown would be right around here at this 883. If that does occur, it'd be in the 1800s. So it'd be in this range. So that's my thoughts on ADA. And I've been really hesitant to take any position on that. I just started looking at Theta to potentially make a move in here. And that's because it looks like we are retesting the top of the triangle breakout. And the only thing that's making me a little bit hesitant is, well, there's two things. The first thing is this breakdown on the RSI retest and rejection. And the other thing that's making me hesitant is that we're on a 6. We're on a 6 of 9 on the 4-hour correction. Now, we're not going to get a 9 if we don't break down. So if we close the price here above this, and that has an hour and 58 minutes left for me to make an actual decision, I may enter a position right here on Theta. I may put a small position in and then put a stop loss somewhere down in this area right below where the triangle can break down, possibly right below where the moving averages are and this 382 line, because I don't want to get caught with my pants down. But a really tight stop loss here. Because we came out of the overbought position, we do have the potential to go all the way down. And so I want to be cautious about that. I really do. And there is some divergence between the peaks. This was all good. This was not. This was looking good. But between these two new highs, that isn't looking great. However, that's not here nor there. That might not be an issue if we decide to bounce from here, which I think we have the potential to do, because we're in the very, very edge of the bullish case for me on the RSI. That 54 area is really, the 53-54 area is really where I start getting hesitant to say we're still bullish. Going over to basic attention token, this is another one that I've been really looking at. And on the 4 hour, and I've been waiting to see 1, 2, 3, 4. I've been waiting to see if we're going to get a green 2 above a green 1, breaking out of this descending triangle. Now, I sold back here, looking at what looked like to be the breakdown, and I've had my stop kind of set at this area, and then I took that off the table because there was just a lot going on, and this was looking more and more reminiscent of something that was going to be stronger and conclude the trend. This one candle obviously screwed that up. However, the move down from here to here actually sets me back into this really nice area to do a good retest of not just here, but also back here in this channel. And that's really what I've been paying attention to on this, is I'm trying to figure out time-wise where we're going to come back and retest the top of this channel. And the daily chart is really where it makes the most sense to me when looking at this this trend change, because this looks like a trend change to me. Now, I can remove that because I don't need that here. But I am looking for maybe at the end of the month to be back retesting this channel, possibly even quicker. However, I am expecting a pullback still, and that's because we are in the overbought position, and the MACD looked like it was about to cross over. However, we did have this huge pump, and this came at the announcement that Grayscale is going to be adding BAT to its trust. Going over to LBRY is the other one that I've been really looking at and paying attention to. I actually entered a trade right here at 361, so you're seeing my profit-loss ratio and my targets. Now, I haven't taken profit yet, and that's because even though the daily is on a 9, what I'm trading is more or less the weekly, which is a 2 going above a 1, and my target, and I'm a little bummed that because I had a target back here at this red one coming back, and we missed my target by 4 Satoshi, so I would have been entered back here, and I just I didn't see this giant 1 candle that wicked through the tops and the bottoms of this triangle. I didn't see that coming. And so when I missed that, I had to readjust my my plan, which was to say, well, okay, because I missed the bottom and I didn't see another pullback to the bottom, I had to see if I was going to try and test and buy the breakout. And so I've bought the breakout so far, and my target is sitting around 677 area on the Satoshi scale. I believe that this is the one that's actually adjusted, and 1, 2, 3, 4, and this is adjusted for time as well. So I'm expecting mid-May to be somewhere in this area, and potentially retesting this high right here. If we do have a larger, more pronounced move to the upside, and we do break this high, I am expecting some type of larger U shape. So you can see how this is a U, and then you have a large U, and then you have kind of another large U. I'm kind of expecting this chop to turn into an even more violent upswing if that's the case, if that's how the trend is going to repeat. And then a return after doing that to what I believe is going to be the new trend line, which is going to be the new trend line, which is not this one anymore, which is going to be this consolidation going up from here on out, which I think is going to be that line. But that will have to be evaluated at a later date. I would like to see this slope, however, on the weekly for sure. This slope is extremely healthy. A 45-degree angle coming off the very bottom of this chart is really easy to maintain. It would actually look like a real start to another cycle in a bull market for this asset. Now going over to Ontology. Ontology is another one that I've been kind of just floating around on my charts. And I've just been kind of looking at this area, seeing what's going on, and Ontology is looking pretty good. I mean, terrible from a long-term perspective, but pretty good in the sense that it looks like it may have finished its correction. And that's because the RSI is bottomed. We're seeing some huge buy volume coming in right here. It's this volume candle right here, this 3, that really didn't move the price at all. It's this one right here that's really convincing me that we've found long-term support, or we found an area of decent support. The only thing I've been waiting on is a 2 going above a 1 on the weekly scale. It's either a 2 going above a 1 or trading above this 5 candles body. It's one of the two of those. And when I see either of those things occur, then I am actually going to take a long position, and this is going to be a small amount, maybe like 0.5% of my trading portfolio. Something very, very tiny, but it's going to be a 6 to 9 week minimum hold. So this is going to be a multi-month swing trade when I take this position. And my targets are going to be based off a couple things. The first is going to be the fib extension, if this is the top and this is the bottom of the correction, which I believe it is. My first target is going to be 424, which is 100% move to the upside. And so this would be the area where I would take, this area is where I would take 50% of my profit. So I would exit 50% of my position right here. Unfortunately, going by the time scales, so for this to flip to a green 1, you'd need 1, 2, 3, 4. You'd need this body to trade above this 5 candle. So if I got a green 1 body off this 2, and there's a day and 10 hours left, I don't believe that would happen. But there are signs that it could, in my opinion. So if we can get above this green line here, and let me make that a little bit thicker so it's easier to... this green line right here, and this area, so that 1618. So if this becomes a 1, which I don't count on, but 1, 2, May 17th or May 24th, which is the 9-bar move. I would say 10 bars is more likely. So I would start from next week's candle. And my target would be here to the upside. And this is corrected 4 times. And this, the only thing that I think could stop the price is going to be one of these moving averages. It's either the 30 or the 50. And the 200 still doesn't exist on the charts yet because there's just not that much history for Ontology on Binance. But that's the area. And one of the other things I look for, even though this 1618 isn't telling me where exactly the prices can go, it is giving me a really close spot for a back test of this area. And so my range becomes, and I'm going to put a red line here because that acts as resistance. So my range becomes between this 1618, maybe a percent or two below it, and right here. And my time scale comes in right here in this little box. You know, off 1 or 2 weeks to reset the count. And this makes the most sense to me. So as I'm planning this trade, this is how I would plan a trade. And I'll do it right in front of you, is I would be looking for an entry. My entry is going to be back here. Or it's going to be the 1 going above a 2. Or 2 going above a 1. My bad. Let me see if I can find a text blurb, and I'll actually write it down. All right, so the call out. So I'll put this right here. So here's how the entry is going to be. It would be entry 1 is going to be a 2 trading above a 1. That's entry 1. Entry 2 is the trading above the 5 candle body. Target 1 is going to be the 1618 extension, 432. And target 2 is going to be resistance at 481. Now, stop loss. My stop loss would be set at the bottom at 172. Yeah, about 172 sats. And that's right below the close of these two, of this yellow or this red candle right here. So a 2 trading above a 1 is what I need to see. I also want to see the breakout on the RSI. And it looks like we're about to get that. We are very, very close on the RSI to actually having a breakout right here. And so we need to see where this closes, and I think we're getting it. Now, as far as candle body, this is a bullish engulfing candle right now, which is also a bullish signal. So you start combining all these, and then it starts giving me a really good picture and a a little bit more of a little more confidence that what I'm looking at isn't crazy. Now, the next thing I need to do is I need to calculate my my profit loss ratio for going in for a long trade. And so right now my position entry is right here at 247. So I need to calculate at 172. 160, let's say 169 is going to be my stop. And let's say my target is going to be here. Well, I have a 75% gain and a risk-reward ratio of 2.37. So I have I can lose 31% of my position at that point, and but my gain is possibly 75. So it's more like a 2.3 to 1 risk-reward. So now what I want to do is I want to go actually down to the daily. And the reason I look at the daily is to see if there's any bullish patterns occurring on a lower time scale that I need to know about, or any bearish patterns. And what I'm seeing here is I have a trend. We broke down on the trend and we broke back up to the upside. We unfortunately didn't make a higher close. Did we trade at a higher high than the 7 candle? The high was 229. The high was 230. See, that's good. So we actually made a lower low and a higher high here. We didn't make a higher closing high, but we had an intra-swing candle high on the daily. That's bullish. Now looking at this, where's the area I actually want to pick up on the daily? Well, ideally, I would like to pick up sometime within this next week. This following week, I would like to pick up a spot right here in this area on this trend line, as it's a 2 going above a 1 on the daily. So I'd like to have my daily be a 2 going above the 1, and I'd like to have my weekly be a 2 going above the 1. Now, I can get a 1 candle next week, and then I can have a 2 candle trading above the 1 candle the following week. So I could be 2 weeks out. So you see the time scales can change. So looking on the daily, I would like to see a week of chop and consolidation in this area, making some kind of higher low here, and then just following along this trend. And then I would like to see the following week having a 2 go above a 1, breaking horizontal resistance that set up a bullish triangle. And so I want to see something like this form on the chart, because it makes it a lot cleaner for me to know where my entries and exits are. And so I want to see something like that form. That's the type of pattern I would like to see start to come to fruition on this chart. And it doesn't have to be anything perfect. It could literally be that we never get a second touch on this triangle. But going all the way here to here, this is within the 2-week span. So I believe we're still going to be within 14. We need to be within 14 candles, so 15 candles technically. So we want to be in this area. So we want to shorten this up as much as possible. And we want to make sure that we're looking good, and we're keeping things nice and tight. So that's what I would like to see. And that's how I would plan a trade. Time target. Now here's another thing. If you break out of this structure right here and you make another higher high, well, this would be considered a higher low off of this, and then that would be considered a higher high. That would be another trend. That would be a trend change back from this correction. So that would also end the previous trend. There's plenty of ways you can draw things. You can draw things like this, looking at maybe a channel that broke, and you can extend the channel out and see if maybe what you're seeing here is a retest of a previous channel that's already been broken. You know, there's a lot of different ways that this could be a descending channel broken to the upside. I try not to use channels too often. However, I will admit they are effective. They are effective for calling trends. And you know, this was the previous channel. We've broken above, we've broken below. So there's plenty of ways to look at this. I am going to be looking at the macro scale on the weekly for my initial trade, because that's how I want to plan this, is a much longer term hold, and then it's a reevaluate once a week. You know, it's reevaluate, where does my stop loss move? And oh, here's another thing. So on a weekly trade for me, my usual pattern that I do stop losses on, or the usual pattern that I have for where I set and where I move my stop losses is really simple. And I'll take this back here as an example. Actually, let me find a 2 going above a 1. All right, perfect. So this red line is going to act as our stop loss. We'll move it a little bit down, somewhere around there. So when this 2 started trading above this 1, my stop loss would go down here. Now when this 2 closed like that, because of the body of this 2 candle, which is very, very bearish, and I trust the candlestick patterns quite a bit, my stop loss would immediately move to the bottom of the body of this 1 candle. When I saw the close of this 3, even though it made a higher low, it's still a really bearish candle. What I would then do, and this is how I personally would do this, is I would take the midpoint of the body of the 1 candle. And so 8.89. So 4.5% is what you're looking for. So right there. And my stop loss would get moved right there. And I'm going to make sure that it is on point so you can understand just how crucial this tiny little difference is for the stop loss. Now, do you see this 4 candle? This 4 candle would have been... okay, so my stop loss would have been 558. The low on this 4 candle is 561. That's within 3 Satoshis. That is not an accident of where I would set my stop loss. That isn't luck. That's a very key thing on the body of this 1 candle. I've said before, and I've said it very often, when I have big 1s, I always get hesitant to go in on 2s. And this is the problem with going in on a 2 after a big run up on a 1. You can have problems occur right here. However, now that this trade would be done, and now that this 4 candle closed, my stop loss immediately runs to the bottom of this 4 candle, putting me at almost break even, and actually putting me probably really close to break even. I would set my break even stop loss right here at the close of this 4. And then the 5 candle, the way it closed would also concern me again. But because I'm in a break-even position, I would not move my stop loss yet. The fact that we closed the 5 candle above the body of this 1 is what would tell me that we still have potential to move to the upside. That's the only thing that would tell me that we still have potential to move to the upside. That and the RSI is starting to trail up a little bit. But the RSI would be bullishly diverging from here to here. That would be the other metric that I would use. But those are the only 2 things that would tell me that the position on this 5 candle, because it's a bearish candle, this should be a red volume candle, and this is a bad candle and looks like a potential top. But I wouldn't move my stop loss from here. And I think my stop loss would need to be like I think I would need to have like a 0.1 or 0.5%, depending on which exchange you're using, you know, whatever area you're at. So oh, I'm sorry. I wouldn't be at break even yet. My bad. My entry would be right here. My entry would have been on the 2 candle trading above the wick of the 1. So my entry would be right here. Now, knowing that, the stop loss does change. Now, at the 4 candle, the stop loss does change. The stop loss actually goes right here at break even, because this is the first time my trade has been positive. And then at the trade of the 5 candle, my 5 would hold my price where my break-even stop loss is at. And let's just say I have a 0.5% that I need to cover for trading fees. So my break-even stop loss is going to be 617. So 617 on the stop loss right there. So that's my break even for the stop loss. Now this trade isn't going to lose me any money. Now this 5 candle occurs. So scratch what I said earlier before I realized that I was setting my stop loss improperly. Now that this 5 candle closes where it's at, my stop is set. It's good to go. The 6 hits it and triggers my stop loss, and I am out of the market at a break even. Now, do I go back in on the market? No. No, I don't go back in on the market. Is there any other spot in here that allows me to make a trade? No. Nowhere on a long position do I have anywhere else to make a trade here. The only place that there is a trade is this 4 going below this 3. And that's a risky trade as a short. It worked out really well, really, really well, actually. You know, you would sell on this, you would see, okay, nothing there, and then you would go back in right here. I would get immediately stopped out on this secondary, but then a 5 going below a 4, because this is such a bearish candle, I might be back in here and then be able to catch that. But that's it. There's not much else in terms of this area that would put me back into a bullish position. Now, I may try to buy the bounce here. I may try and take an entry in this position with a stop loss right here. However, that wouldn't be based on the DeMark system. That would be more or less based on a back test of this area as support. So, all right, that's everything I have for today. I may do another video tomorrow, but I hope everyone has a wonderful Saturday, and I will talk to you then. Bye for now.